Well, the price of oil dropping today, making its biggest intraday decrease since October due to U.S. President Donald Trump signaling he may hold off on military action in Iran. And you can see oil's off by 4.4% right now, down well below 60 after pushing up close to 62, almost 63 at one point. And of course, it pushed higher in the new year with the upheaval in Venezuela. That added geopolitical risk. Now, here to talk about what's next is John Stevenson, founder of Granite Point Research. John, thanks very much for joining us.
Yeah, thanks for having me.
Okay, what's next? What's next? We're week 2 of the year, so what's next in week 3?
Well, it's been up, it's been down. Maybe the next move is up. Honestly, probably if you didn't have any of these geopolitical events, I think you'd have to say that it's going down and probably down for the first half of the year to perhaps $55 a barrel before rallying. I mean, the market's oversupplied by a couple million barrels a day. So, what it really needs and what it's benefited from recently has been that geopolitical shock of a possible invasion. And that has huge, repercussions. Not only is, Iran a significant producer in its own right, but, the potential for a blockage of the Strait of Hormuz or an attack on neighboring Gulf state oil facilities, all of that is what could drive oil significantly higher. Yeah, but in the medium term, say in the next year or so, it's probably down a little bit to mid 50s, and then up to high 50s by the end of the year. Because I really do think overall it's a much more bullish story for oil as we move forward into back half of 2026 and into 27.
It looks like with these events with Venezuela and now Iran, you kind of see, and then everybody calms down again and people just get realistic about how things are unfolding. With that overproduction, how long can that go on? And are there any indicators they're going to kind of get it back into a more balanced approach?
Well, yeah, OPEC Plus is basically, throwing the throttle, gone to full throttle. And I think it's doubtful that it can continue for much longer. And that's why I say it's probably going to rise in the back half of the year. That's one factor, is just the sustainability of it. The actual physical market doesn't really show that much inventory. So it's kind of a bit of a mystery where these supposed barrels are going. But clearly it's a fear that's weighing on the market. And it's a fear that, the market is taking quite seriously. So I think at some point, the fact that it may be a bit of a mirage, these oil barrels, and the fact that demand will slowly creep forward, assuming the global economy can kind of continue to limp along, or if it actually starts galloping along, that would put a real strong floor under oil, and at least $60 a barrel.
And with the prices where they're at now, what kind of an effect does that have on any decisions about Venezuela from the major oil companies? I mean, we heard it was at Exxon got chastised, I believe, right, by President Trump.
Yeah, well, everyone comes in for a little punishment from the Oval Office from time to time. But look, the reality is all the budgets have been set for 2026 by these oil companies. They were set, some time ago. So nothing is going to even begin, to get into the planning stages till 27. So that puts it off for, at least 2 years before you could see anything. And I think, the truth of the matter is the infrastructure state in Venezuela is quite poor. But, you go out 3 years and maybe you've got a couple of years of the U.S. oil majors coming back and they start to invest, billions of dollars, 10, plus billion of dollars, collectively at least. I think you could bring on some production and, get back up to that sort of 2 million barrel a day or close to it range where, during the 90s, before Chavez came in and started, expropriating these properties, and that would be detrimental for Canadian producers. But I think that's at least 3 years out. So I don't think it's going to have a bearing on the oil market for, till probably 28. Because it's just not that significant, and it remains to be seen, just how bad a state the infrastructure is in and how fast production can come on. I think you can get some short-term production that comes on, maybe doubling it to 1.6 million barrels a day total output from say 900,000 barrels a day, which is where Venezuela is at now.
And with Iran, I mean, the biggest fear, I think, because they're putting out about, what, 3 million barrels a day? I think was the number I saw, 4 million.
Yeah, it's 3.2, and they used to produce 6. I mean, the thing about Iranian oil is it's pretty cheap to get out of the ground. So it's conventional oil, very easy to get out of the ground and inexpensive to get on the ground. So it's highly prized. A lot of it is going to China. All of their exports, in fact, right now, about 1.7 million barrels a day are going to China. So, that adds another layer of geopolitics into the mix. But in essence, they certainly have the capability to do more.
And the big concern, though, if anything flared up with Iran, it would be the Strait of Hormuz. That, what is it, 20% of the world's oil goes through there?
Yeah, 20% flows through there. So it's hugely important. It's a narrow strait. And maybe sink a couple tankers or something could happen, or another oil refinery or in Saudi Arabia or somewhere like that. Those would be the sort of threatening moves that people would be very concerned about. Plus, obviously, just the fact that it could become a broader conflict. Israel could be attacked. The Fifth Fleet could be attacked, etc. So there are a series of repercussions, but the big ones in my mind are blocking the Strait of Hormuz, impacting infrastructure in the region for other countries in the Gulf region, as well as Iranian production being off for some time. And depending on whether it became a boots on the ground conflict where it went on longer than you'd think. But if it's an attack and it's over in 24 hours or a week, it's probably a blip. And I think we saw oil push up into the 70s with the Israel and Iran flare up. So I think you could see that happen again if this were to go that route, and it could push even higher than say mid 70s. If it was a boots on the ground and protracted situation, then you might be looking at oil trading in the mid 80s. So, it really just depends on what, if anything, happens with this potential conflict.
All right. But for now, cooler heads. John, thanks as always for joining us.
My pleasure. Thanks for having me.
John Stevenson, founder of Granite Point Research.